Welcome and thank you for joining us for this episode of the Crexi Podcast, an insider's look at all things commercial real estate. In this show, we cover a broad range of topics that cater to both commercial real estate newcomers and industry leaders alike. I'm your host, Yannis Papadakis, Business Development Manager on Crexi's auction platform, and today we are thrilled to sit down with Gavin Myers, Managing Partner at Prudence. But before we jump in, a little bit about our guest. Gavin Myers is the co-founder and managing partner at Prudence, a global venture firm investing in technology companies leading the global transformation of the built world across real estate, construction, infrastructure, and climate adaptation. Gavin has been investing in the PropTech sector for over a decade and is one of the most active investors in the space globally. He serves on the board of directors at Casafari, Evernest, Morty, Planera, Vendor PM, and Crexi. Previously, Gavin was a vice president at Sun Capital Partners, where he focused on middle market private equity. He began his career as an investment banking analyst in the CSFB Technology Group and is a graduate of Yale University and Columbia Business School. Gavin, welcome to the podcast.
Thanks for having me. It's great to be here.
Great to have you. Now, I mentioned that you're on the board at Crexi. Great to have you in the studio. What do you think?
It's great. I'm within striking distance of one fern, so that's good.
Right.
It's always good to be here. I was noticing earlier it's like the first day of a quarter, and yet the sales team seems like they're firing on all cylinders, which is you almost expect a letdown after the end of a previous quarter, as Q2 ended last Friday. But no, it's great to be here. The energy is always really high. And it's good to be here. Thanks for having me.
Well, we're excited to have you as a guest. And, before we jump into the weeds in our talk track today, I'd love to talk a little bit more about your background. We covered some of it. Love to learn more about your career path and some lessons learned along the way. Can you tell us more about where you're from and how you got your first start in venture capital?
Absolutely. Sure. Maybe I'll wind back the clock just a little bit further than most people. But I grew up in the Washington, D.C. area. McLean, Virginia, grew up a typical kind of suburban life. But it was a life where my parents, while they had other professions, were actively involved as investors in real estate. So they were buying single family residential properties and, we're trying to do it, kind of the budget way as one would when they're getting started out. And so we were involved as little apprentices of them going through and helping with the turnovers and oftentimes removing the things that the tenant left behind. And I can remember taking stuff to the curb before the bulk pickup would happen, painting fences, doing touch up on the inside. So I've been kind of exposed to the world of quote unquote commercial real estate for some period of time. But that was a great experience. That is not the career path I took. I ended up going to college in the Northeast at Yale. Then I worked in investment banking, like a lot of people do coming out of college that have no idea exactly what they want to do. But I loved technology, and technology was just starting to emerge. This is kind of, if you wind back the clock, this is making the decision to go to college in 1994. So this is you're just having the early days of the Amazons of the world. The early internet explorers are starting to come out. People don't have broadband connection yet. This is a very janky experience early on. But I came out of college and I was just fascinated with the technology world and ended up joining Credit Suisse First Boston and working for a guy named Frank Quattrone, who, if you were working back then, he was really operating this investment banking firm at the center of the technology ecosystem because companies were raising smaller amounts of private venture capital before going public. So I was just getting immersed with working with early stage companies, both during the kind of period of the dot-com bubble, the burst of the bubble, and then the kind of period of what was left, which was few and far between, but were fundamentally good businesses with great technology, real customers, and actually profitability. And so I gained an appreciation for an early stage of what it means to work with technology companies, how to identify good technology companies, and how to find the right ones with real enduring businesses. And so I was very fortunate to have just had a little bit of a preference for technology and then gotten thrown into the deep end and then really built my career from that point forward, focusing on a stage of business at the early stages, that is, and building a business Prudence around that. Sorry, I've been going on for a little bit. I'll pause there.
No, that's fantastic. I mean, I'd love to hear a little bit about some early lessons that maybe you learned or some mentors that helped shape your path.
Look, absolutely. And I think that this is something if you're ever sitting inside of Prudence, you'd hear us talk about all the time, which is we have such an emphasis for high quality companies built by high quality people. A lot of people say it, but obviously, the devil's in the details of how you make the determination of that. And so when we look for businesses that, the lesson is you can't sacrifice in order to get investments done, to be busy. You have to be patient. You have to wait for these great companies. And it takes looking at a lot of companies to figure out which ones actually meet that threshold. And I can actually walk you through like kind of the Crexi thought process if you're so interested in hearing. Sure. So Crexi's one where we had met Mike. We had met Mike very briefly during the seed stage. It was very early. Mike was very raw back then. And I mean that to just like talk about how much of an amazing CEO he is. We connected again during the Series A, spent a good amount of time. I remember, you had gone from having kind of tens of properties for sale to tens of millions of properties for sale to by the time you get to the Series A, you had billions of properties listed for sale. It was really impressive, this marketplace he was building, but they hadn't quite turned on revenue generation yet. And so that was a tad bit early for us, but we stayed in touch. And by the Series B, I think the billions of properties for sale had climbed to hundreds of billions of properties for sale, and revenue really started to skyrocket as you rolled out your initial product, Crexi Pro. And to me, that was just an incredible sign of a founder who had a vision, and everything he said he was going to do, he did. And it was just impressive to monitor the company year after year. And so we were patient. We had to kind of align our decision to invest with the type of capital we have and what we need to see. But we waited. And Crexi is a good story. You go through our portfolio, we wait for a lot of our companies to kind of hit that sweet spot for us. But then that was, 4 years ago, and the company is at this point, more than 15x'd the size since then. And we've been truly impressed to watch Mike and the team grow from this position of really understanding their end market, understanding what products were out there, the needs that were not being met, and trying to solve this acute pain point with a better product experience, and one that was affordable, accessible, and that there's this community that's been built around it. That's a really hard thing to do. Very few companies have done that. And so anyhow, that's kind of how we found our way into Crexi, and have been thrilled to be part of the ride ever since.
That's amazing. And, this kind of leads into my next question, which, I'd love to hear a little more about Prudence. And, if you could share more about your company, your investment ethos, and what guides your strategies.
Sure. So Prudence is an early stage venture capital firm. We focus on companies as early as seed round, although we rarely make seed stage investments. Really, it's Series A, Series B. That is companies that have products, initial products. They're in the hands of customers. Customers are using the products. You can measure the criticality of the product to that end user. And so we want to take these early signals and try to do an assessment of whether or not that's transferable to having access to more capital and really growing that to what is kind of generally known as venture scale. So we're kind of specialists at the early stage, finding these early signals and trying to extrapolate them into something that could be hopefully one day a standalone, independent company, not at all reliant on venture capital dollars, but growing through its own profitability. We, as a firm, used to be generalist. It was interesting, in our first fund, we had one built world investment. It was an early stage company at the time called Compass Real Estate, which in its earliest incarnation was really tools for real estate agents to deliver a better experience when advising their end customers how to buy and sell residential real estate. We were not at all focused on the real estate sector or the construction sector or any of these other ancillary built world sectors. But it was interesting to see Compass's early growth and seeing the individual practitioners, these agents in the residential world, not brokers as they're called in the commercial world, as you know, but these agents really flock to a better product experience. And I'd say from that vantage point, we started to just take a look at all these other ancillary sectors. And we take this first principles approach to investing, which is, all right, somebody wants to buy a home. They work with an agent. Then what? Well, they need to finance a home. Well, how is a mortgage made available to someone? How does somebody get access to a mortgage? Really break this down. And when you break down getting a mortgage, my God, it is a nightmare. It is a crazy process. And we almost know too much to go invest in mortgage again, right? Because it is such a cumbersome process. I say that jokingly. There's so much room for improvement, and we've made 2 investments along those themes. But that's led us to property management. And interestingly, as being deeply involved with Compass, there were some opportunities early on to move into commercial real estate. So we started studying commercial real estate, and we looked at, well, all right, how does one search for commercial real estate? Wait, that's it? That one company, that's the product you have to use. My God, it was this. Well, there's got to be a better way. And so, as an outsider to the sector, we weren't kind of beholden to the sector. We weren't threatened by incumbency and legacy operators. We were just, taking a first principles approach. Can you build a better way? And that's what led us to Crexi. Quite frankly, over time and before we ended up investing in Crexi, we as a firm decided to become completely sector focused in this built world. And the reason we did that is simple. We just found that it is hard to not be a sector specialist and to drop into real estate or construction and actually know what you're doing.
Right.
So the risk of making a mistake is just too high. It's a sector that requires specialization. The people who work in this sector, they get that. Right? There's nuances to every subsector. There's nuances to every type of construction. There's nuances to the entire world of infrastructure. And unless you are steeped in that, you will make mistakes.
You mentioned earlier about you look for early signals in companies to invest. And I'm curious, are there signs of success in founders that pitch you and red flags that you look for? Could you talk a little bit about that?
There are tons of signs. I'll boil it down though to one word: authenticity. You can just tell who's in it for the right reasons. There are the true believers and there are the mercenaries. And the true believers are the people we back time and again. And the reason we back them is because it is hard to do this. This is a risky thing to do. I know it gets popularized in the media and these founders become, in some cases, celebrities, but the true work of being a founder is not pretty. It's hard. It's a grind. The highs are high, but the lows are very low, and the lows can last a long time. You can have a business that plateaus, a product that no longer meets the needs of your end consumer. You could have emergent competition. And of course, you're just running a company. And people forget this is a technology company, but it's built by people, right? And so these are hard things to do, to raise capital, deploy capital, to scale it up efficiently while meeting the needs in your market. And you just have to want it so badly that if you're in it for, say, the money, the stock options, the upside, you're going to lose your passion. So,
now you recently announced a new funding round earlier this year. And I'm curious, what are your goals for this next investment chapter, and what projects or types of companies are you most interested in working with?
Sure. So yeah, we announced our third fund earlier this year. We are deploying that fund. We are focused, as you can imagine, as a firm. While I mentioned that we're early stage, while I also mentioned that we're focused on the built world, we are also within this category, I'd say one of the more technically focused investment firms. So we're always looking for advanced technology, advanced capabilities that are differentiated, defensible. And it's impossible these days to avoid the conversation around artificial intelligence. It's a technology that has been, in many ways, decades in the making, but all of a sudden is realizable. And so what that does for someone like our firm, Prudence, is you can almost widen the aperture of problems that were acute previously that can now be solved. Why? Because you can replicate the power of human intelligence to be better, faster, and cheaper than that pre-existing alternative. That shows up a lot across a lot of different industry sectors. And certainly the amount of innovation with AI at a place like Crexi. It's unbelievable why we have this unbelievable access to unique data. We operate one of the 2 listings platforms, and we already have a data intelligence product. There are innovators out there that can leverage these unique capabilities in commercial real estate. Construction is another category where there's a ton of data and nobody's put it to use. And you've got all this confluence. Take a construction of infrastructure. You've got trillions of dollars, $5 trillion of annual spend in infrastructure going up to $6 trillion. It's an extra $1 trillion, right? To meet the needs, you need skilled labor and unskilled labor, both of which are harder to come by, right? So you have more dollars to create more projects with fewer capable humans. Well, how do you fill that gap? That gap is filled with artificial intelligence. And so if you're, for instance, trying to build utility scale solar, which is something I know we want to talk about, utility scale solar, the amount of installed utility scale solar it's literally going up hand over fist every year. These are installations that can cover 5 to 10 square miles with millions of components to be installed in the ground. How can you, at any given moment, tell the owner or the lender or the superintendent on the project how much has been installed and has it been installed accurately? You can't do that with human surveyors. So not only do you need a drone to fly over, but then you need to ingest that data and know what you're looking at and be able to interpret it in real time. So the drones flying over large infrastructure sites are becoming more standard, but it's the processing of that information to then feed it into existing systems of record and to do it in real time. That's very complex. And so we invested in a company called AI Clearing that does that. It gives you real-time access to exactly what has been built and has it been built accurately across anything from utility scale solar to data centers, to LNG terminals, to airports, to this big project in Saudi Arabia called NEOM. I mean, they're all over that project.
I'm following that.
Yeah, it's fascinating.
Yeah.
Yeah. If it ever gets built, it'll really be interesting.
Exciting, fascinating. Also has this almost cyberpunk dystopian aspect to it too.
Yeah.
I'm really curious to see if they're going to stick the landing.
It all depends on the price of oil.
Right.
And so I think if oil stays above $80 a barrel, there'll be continued progress. If it drops below, it'll get halted. That's kind of the nature of construction in Saudi Arabia.
Well, I'd love to get a little more into the weeds of PropTech and talk a little bit about some of the experience and the companies that you're working with in different corners of the space. So kick us off. What does the PropTech startup space look like for companies getting started today? And how has that evolved and changed from pre-pandemic?
Sure. I mean, I think, one thing that's changed, I'd say kind of certainly, let's go pre-pandemic and then post-pandemic, was just a real open access to capital. That was probably a little bit too loosely distributed to founders. I'd say that the standards have just gone up. And really the question is, what are your technical differentiation capabilities and how defensible is what you're doing? Measured against your ability to really take that product to market. And I'd say that the standards, the thresholds, at least certainly that we deploy, they're just higher. Having said that, I do think that there's an expectation that one can build more technical capabilities better, faster, and cheaper nowadays with all the advances in computing, not the least of which is now access to AI to incorporate into your products. And so you're really seeing this delineation of, is this a vertical AI business or is this a vertical SaaS business that can incorporate the best large language models into their products to enhance the capabilities? There's probably a world of, we'll say, like tech-enabled services, certain types of marketplaces that are going to struggle to get access to capital that used to get readily, funded. And so I think that the bar's just gone up a little bit. And the reason the bar's gone up is because people are excited to invest in advanced capabilities. And so it's not that what a founder wants to build in a tech-enabled service capacity. I remember, not that long ago, actually, right around the time we invested in Crexi, there was a category of companies. It was this tech-enabled tenant side broker business. And we took a look at it, and ultimately we weren't interested in the time. This is maybe 5 years ago, but I don't think any business like that gets funded today at all. I don't think they even get meetings, right? Because it's just not pushing the boundaries of technological innovation. And investors have to make these hard decisions to allocate dollars to real innovation. And it's exciting, right? I mean, sorry if I'm too excited, but yeah, I love what I do, and it gets...
It's authentic. That's what we look for.
Yeah, it's true. Yeah, maybe that's why I look for it in founders, is because I feel it, and people have to feel it. And so, when you're sitting in front of a founder, and it's, I don't know if this team can keep up in this kind of fast-paced environment where you need to have technical capabilities. You need to be able to constantly innovate. And so if you don't have that, it's going to be tough.
Now, how do you see the sector changing in the next 5 to 10 years? More of that same trend?
Oh, no question. No question. Yeah, I think it's a, I hate to use some of these like typical phrases, but yeah, there's absolutely an arms race, and there's going to be companies that have the ability to innovate, and then there's those who don't. And those who don't will probably have to do lots of expensive acquisitions, and so that's what you'll see. You'll see these incumbents in the real estate sector leveraging, what do they have? They have got a balance sheet, and they've got maybe a publicly liquid share price, and they will acquire capabilities that they have no chance in the world of developing in-house, zero chance. And the reason I can say that is because I know how hard it is to build these capabilities. I know the kind of people that you need to be able to recruit. And it is not impossible, but it's really hard for incumbents to attract top engineers. You're a top AI engineer. You just don't want to go work for a 30, 40-year-old company that's, strength is in sales and marketing and its balance sheet. I mean, those become the companies that acquire the businesses, and that's fine, right? I mean, those are just market dynamics, but those are also, I'd probably more accurately say those are just market realities. And so I do think the big will get bigger, but the innovators will grow faster and, either stay independent or, get acquired. But I can also make some specific predictions on the types of products and experiences that will be out there, but I'll pause because we've been going for a bit.
Well, I'm curious to see what are some of the most exciting advancements that you see companies working on today.
It's the automation of everything. I mean, how can we... So there's a lot of vertical SaaS businesses.
Right.
Vertical SaaS is, at a basic level, is taking a workflow. I think Crexi uses Salesforce. I don't think that's proprietary to talk about, but it's Salesforce is a vertical SaaS company, and Salesforce is trying to build automations into every part of that product experience. How do they do that? Well, they have plugins, they have capabilities, they have data that they're measuring. Well, if you are a vertical SaaS company, Crexi also is a vertical SaaS company, we're measuring workflows and have workflows on behalf of our subscribers that have manual touch points. And there's ways to automate parts of that process. So you're just going to see this massive wave of automation in the service of creating efficiency for your customers to unlock them to focus less time on the things that aren't productive and more time on the things that are. And so for your commercial brokers, it's going to be giving them just immense access to data analysis, and decisioning on the fly so they can do what they do best, which is find opportunities and then work with human beings to get deals done.
Now, conversely, what are the most interesting challenges that you feel currently aren't being met by the market or could be filled by an adventurous startup?
Oh, boy. Yeah, I mean, there's so many. That is the basis of our day-to-day, which is finding acute pain points, gaps in the market, and then making sure that the founders we are talking to that are building the products that we're evaluating are solving the pain points for the customers that they're selling into, right? And that is the nature of what we do day in, day out. I mean, we just invested in a company that is solving one of the most significant pain points in construction, which is construction is an unbelievably large sector. I think it's larger than that infrastructure amount I gave you, which is $6 trillion. The overall construction sector is around $10 trillion a year globally. About 15% of that spend is on change orders, which is there was something that was planned at the start, contractually provided for, and then it was changed mid-cycle, whether it was changed by the owner, whether it's changed by the general contractor, or there was some realization out in the field and people had to make some changes, keep track of the changes and submit them up. That entire process is not served by existing software tools. This is a huge workflow. $1.5 trillion of value is not being captured by existing workflow tools. It's almost a separate workflow. And the company we invested in, ClearStory, is the only platform that has been built for this, shockingly, right? But that's, again, part of the advantage of being focused on this built world. There are big things that have just not been solved yet. And they've become fairly quickly the industry standard, used by, it's like 52% of the top 25 largest global general contractors use them. It's like 38% of the top 100.
Wow.
And that's not use them across all their projects, but use them across a lot of projects. And so they're just going to grow within their core, but then there's a lot of the market that just as a young company, they haven't been able to reach, which is something you experience here at Crexi. It just takes a while. And so that's a great example of software company, huge unmet need, great product. Customers love this product. My gosh, like we did 13 customer calls, which is about what we aim for. And we kind of got off these calls. We've never heard customers love this product so much. Well, then where does that product go from there, right? Is the question we always ask. There's always room for more automation. It's a vertical SaaS product with room for automation, and that will continually get automated so that the participants can get back to what they do, which is construct, right? And not spend all their time keeping track of what was originally planned to be constructed and then what got changed mid-flight.
Let's talk about AI. Obviously huge advancements have occurred in the last 2 years with many businesses racing to integrate it into products and services. How do you see AI being used or explored in the PropTech space? We touched on this a little bit, but how do you really envision it being interacted with by, the core users of these products?
Yeah, absolutely. And you have to, when answering these questions, just take discrete segments and talk about those, because it's impossible to generalize and say anything interesting.
Right.
So let's take your neck of the woods, right? Brokers out in the field. This is effectively a mobile profession, right? They're out and about. They're looking at properties. They're working with people. They're doing due diligence. These are people who need more support at a moment's notice to answer questions. This is a prime example where you have brokers, right, in another another segment, right? They're called agents, right? Well, in the world of AI, what's an assistant to a human? An AI agent, right? So you're going to have brokers with AI agents in their pocket, in their ear, capable of answering questions, capable of advancing workflows, capable of giving you answers in real-time analysis, right? Like you're having a discussion, like, this building we're looking to sell, it's got signage rights that are not being used. Well, what's the value of that? Being able to answer that question on the fly, accurately and dependably, is not easy. It would take a human being probably a week, maybe more, if they could even get to the right answer. Right. Ideally, you could have that answer in microseconds.
Yeah.
And that's a pretty exciting world. Why? Because it just turns that broker into a super broker, right? And they can do more with less. They can get through traditional friction points. Right? I mean, how many lease negotiations get hung up over 1 or 2 points where people are pounding the table? And guess what? There's thousands of data points that have already resolved this issue. Let's focus on something else. And it's not just about the strength of our personality, but it's our ability to bring the right data to the forefront so we can cut through these points of friction and get things done quicker.
What would you say the biggest challenges are of integrating AI into commercial real estate processes and tools today? And how do users or developers of such technologies need to think about solving those challenges?
It's such a good question. So building off of what I just said, that information has to be right.
Right.
And so the product has to be architected by people who know what they're doing, leveraging data that everyone knows they can trust. And so having access to that data, being able to leverage that data, and then being able to architect a solution will not be easy. And there's very few companies today that are actually in the right position to be able to solve that.
Do you feel that part of that is because, historically, commercial real estate data has somewhat been hoarded by those that, have it, right? How do you democratize that data, or at least access it in a way where it can be utilized in a meaningful manner?
Look, it's there's no silver bullet, but it starts with getting access to data that others can't. Getting access to data that others can't. Well, first of all, there's accessing all the data that is available, right? And just being able to aggregate that is not easy. And that's something at Crexi that the team's been very focused on and has done a fantastic job with. But then there's the data that people can't get access to. Well, then it comes down to trust, right? And are you a partner to that provider who has the information? Do they trust that if they input that data into the system, that they can trust that they're not going to get kind of like squeezed for higher prices, or they're, it's the proverbial, well, you bite the hand that feeds, which is a business model in our sector, right? Which is, trying to squeeze people through telephonic calls for their proprietary data, only to aggregate it and sell it back to them for probably more than it's worth, right? That's like, that there's a term limit on that business cycle because the participants know they're getting squeezed. Individuals realize that there is value to the data that they have, and that there's value to the we'll say the aggregator who they provide it to. So there has to be this symbiotic relationship, and that's going to be based on trust.
Right.
And so there's only going to be so many companies in our sector that are able to pull that off. And so you ask yourself as an investor, which companies are trusted and which ones are not.
Now, what advice would you give founders that are looking to break in and innovate in the construction, PropTech, or built world sectors, or more generally as founders themselves?
Make sure that the pain point you are solving is acute. It's the number one reason why, number one piece of advice I give to founders. They see an opportunity, an unmet need, a pain point, but it's all not big enough. It's not acute enough. And it's a like to have, not a must have. I've never seen a successful company be built on an idea that was a marginal improvement. It has to be something that really makes a difference, because it's hard to do what we do. We've established that earlier in the conversation. And so it's oftentimes the problems just aren't big enough to be solved. And we tell founders that all the time, look, we could be wrong. And we tell them that that's just one investor's opinion, but just make sure that it's not just, oh, that's neat. Oh, that problem hasn't been solved, but it's not that big, or it's not that painful.
Right. Well, moving on to our third topic, given your specialized background and expertise, I'm sure our listeners would be curious about your answers to a few of our rapid fire questions. You ready?
I'll do my best.
All right. If you were given $50 million today and had to invest it immediately, what would your strategy be and why, real estate or otherwise?
Well, it would be, it would honestly be I would literally go across our entire portfolio of our Fund 2 and Fund 3 companies, and I would add real dollars to those businesses because those companies are doing great, and I'd want to add fuel to their fire.
Awesome. What's your favorite tool or software you use in your day-to-day work?
Man, it depends on the day. It depends on the problem. It depends how acute the problem is. Some days I love DocuSign. Right? I'm like, the last thing I need to do. Well, it's funny. I joke here, but we have one company in Germany where everything requires wet ink signatures, and I've never appreciated DocuSign more than when I have to actually physically print out a piece of paper and sign it, and then have to find a way to get it back to them in real wet ink form. When I get those emails, I'm sorry, we need this in wet ink, there's a part of me that dies.
And what is the most common misconception about your job or industry?
I want to come back to the technology question for a second, if you don't mind. Really, we are big data. I hate to say the word nerds because that just sounds wrong, but we love data at Prudence. And so we're internally building a product that aggregates lots of disparate data sources that we commonly use And so we've got our own native data aggregation tool, which in a lot of companies, they have somebody in the role of kind of data science. And data science generally means they can do queries to databases to answer real human questions. That is in the process of being automated across a lot of the data science teams, across a lot of our companies. We too have our own database. We too query our own database. And so we're building a tool to aggregate all of the common points of data that we need when we're assessing companies. And so that is actually the product that I live in the most.
Awesome. Okay. And
DocuSign is still
and
fine.
I mean, you gotta love DocuSign.
It's
It's a love-hate
fine.
relationship.
I mean, it's
sometimes.
fine. Yeah, it's fine.
Most common misconception about the VC world?
VC is, there are regional differences in VC. So probably the most common misconception is that kind of the way that VCs operate on the West Coast, kind of Silicon Valley is kind of how everyone operates. I think, but we have our own flavor of VC. We don't like to have a ton of portfolio companies. We don't like to take swings that we feel uncomfortable with. We're okay taking real risk, but we like to really understand the companies and businesses. And so I think probably the most common misperception is that it's all about just getting access to a small number of companies because those are going to drive all the returns in a portfolio. That's only true if you're, a $500 million to $1 billion fund making 50 to 80 investments per fund, and you need to catch a Google or an OpenAI to generate those kind of returns. But the way that we invest, I mean, we had 10 companies in Fund 2. We just went through the worst technology recession of the past decade. All 10 still exist. All 10 are growing. Not all 10 are crushing it, but they're all real businesses. And I say that really only to emphasize that, there's firms that have had 30, 40% of their companies go out of business, and that's okay to them. But that just means that there's lots of different ways to be a venture capital investor. And we have our own way that we're comfortable with because it matches our personality and how we think and how we like to invest. So it's a long way of saying it is far from a one-size-fits-all industry.
Got it. Well, as we wrap up, any parting words you'd like to share with our audience?
Yeah, sure. I mean, I live within this sector that your audience lives within. I look at it from a different vantage point. I think the hardest parts are behind. If software adoption is a leading signal of how the industry thinks, it's been a pretty good 9 months, actually. Companies are now kind of raising forecasts versus cutting forecasts and then underperforming the cut forecast, which was the story of 2022 and early 2023. There's a lot of life. There's a lot of adoption of software. I think there's a sense that, I need to be better at what I do. And if something can give me superpowers, I need to adopt it. So and look, not all venture is the same. Not all real estate is the same. And your listeners know that better than anyone. But I would say it does feel like, the leading indicators of overall sentiment would be pointing more positive right now.
Oh, that's great news.
You bet.
Well, thank you so much for joining us and sharing your insights. I know you're very busy, and we appreciate you taking the time to sit down with us.
I'm so glad to. You guys are I just want to say this. I love Crexi. I think you guys do so much for the industry. I think you're on the side of the industry, and the industry feels it. Everywhere I go, I travel a lot. Whenever I mention I'm an investor in Crexi, people are even more excited to talk to me. They're like, okay, great. We tell the company we love what they do.
Oh,
and that's all across America. And actually, I talk about Crexi in parts of Europe, and they're like, we need that here.
Yeah. Yeah. Well, we appreciate the love. Where can people find you if they want to get in touch? LinkedIn, email, social media?
Yeah, LinkedIn. I'm on LinkedIn pretty regularly. Please feel free to send me a message. I'll do my best on LinkedIn. It's a little bit crowded there, but I love to hear from people. Love to hear about people's real life experiences, problems that they're having, technology ideas that they would love to have. We're always trying to ingest insight from the people who work in the sector to help inform our decisions. So yeah, please feel free to reach out.
Well, thank you. And thanks to everybody who tuned in today. If you enjoyed this episode, do not miss the next one. Visit crexi.com/podcast to get the next episode directly into your inbox. And of course, you can also sign up to the Crexi Podcast on your favorite podcast app or check out our YouTube channels for video recordings of each episode. Thank you, and look forward to tuning in next time.